Hey guys, Dave Keller here with Market Misbehavior. Today on Wednesday, the market's selling off again for a second day, and I thought it was an appropriate time to share one of my favorite quotes about investing. Don't confuse brains with a bull market. You see, when everything's going up, or when it feels like it, a rising tide lifts all ships, it's been said. It's very easy to get complacent and feel like your investment process is great and your stock picking abilities are amazing and your asset allocation decisions are solid because things are just going up. When the market goes down in more of a bear market phase, that's when things really get exciting, and that's when it tests your mettle and tests your processes, right? It makes you really stay true to what you're trying to do. I've often joked with my technical analyst peers in the industry that our phone often rings way more in a bear market than in a bull market. Everyone feels pretty confident when things are going up, but when things go down, that's when there's a lot of uncertainty. Speaking of uncertainty, if you look at the AAII rankings, which are the American Association of Individual Investors, good measure generally of retail sentiment, over the last week, so this was last Thursday, week to week, the percent of bullish respondents went down, the percent of bearish respondents went down. So both bulls and bears lessened, and what that means is a lot more people switched from bullish or bearish to neutral. So that is the definition of uncertainty. There's much more neutral investors now than there were a week or two ago. So what do you do in this sort of environment with potential further downside? Things are rolling over, starting to see a lot of red on the monitors. Two things I would suggest for you on a week like this. Number one, this is a really good time to go through your current holdings, go through your portfolio, and make sure you have a sound exit strategy for everything. The way that I would think of it is go through each of your positions, each of your holdings, and think, in what scenario do I have to admit that that trade is no longer working, or that this is wrong and I need to lock in profits or cut losses or whatever downside risk management you need to do. I always recommend to my clients to do that right at the beginning, right? The moment you put on a position, you should have the exit strategy clearly articulated. If you haven't done that yet, do it now and go through and literally write it out or type it out somewhere where you will see it and identify, for this position, if this XYZ moment happens, I'm going to sell it, or I'm going to unwind it, or do whatever. What that does is it takes the emotion out of the decision later, right? So instead of facing a potential loss and having to make a decision as to whether or not you want to deal with it, you already have your exit plan laid out, and you just need to follow the plan that you've already articulated. So that's the first thing. The second thing, this is a really good time to look for stocks, look for assets that are actually working, right? So in the equity space, things like utilities, things like old school telecoms, things like consumer staples, Visa, things in financials, insurance companies, there are a number of stocks and groups that are actually outperforming right now, that relative performance is going up, that the prices are making new 13-week highs, pretty constructive patterns, even given the market weakness overall. So this is a really good time. Anytime the market is doing one thing and most stocks are doing the same thing, I like to look for what's doing something different. And those outliers a lot of times will help you identify some potential opportunities you may not normally have seen in a bull market phase. If this sort of thinking of investment process and behavioral finance and mindful investing is of interest to you, I hope you'll check out some of my other videos on the Market Misbehavior YouTube channel. Thanks so much.